For the final trade of the day, Mike Patton, head trader at Funder Trading, is focused on a tech stock. Mike, what's your trade?
All right, folks. Good. The trade of the day is Google, symbol GOOGL. You could also do GOOG, but let's focus on GOOGL. Currently, the stock's trading around 160 something a share, like 160 to about 163, right in that range. But looks like we have a pretty good opportunity. This recent market downturn that we've seen, especially in the tech sector, has pushed a lot of these tech stocks into very good price points, places where I do strongly believe there'll be substantial institutional buying. We're already seeing that. So for Google right now, if we look at it, we have a 1.4% increase in institutional ownership over this last quarter. That amounts to 436 more funds that have decided to buy the stock. 56 more have decided to sell it, but obviously the buyers are greatly overwhelming the sellers, and it's now in 232 more top 10 lists. I've even noticing over the last 5 days that buying activity is definitely stronger than selling activity by a pretty good margin. So this looks like a stock that's in pretty high demand. But looking at the overall picture, let's talk about the potential upside and downside. So right now, I would say, at minimum, we should be able to see the stock get to somewhere around $200 to $218 a share, like somewhere in that range. Right now, it looks like it's trading at a pretty decent discount, probably $20 lower than it should be. So I definitely see some upside potential there. Also, if we look at the earnings profile, earnings are still continuing to grow and are projected to grow into the future. So I think this looks like a really great opportunity. But the downside is this. In the event that this stock does not play out the way that I think, I would say we should get out somewhere around, if it gets down to about 149, 148 a share from where it is now, I would say that would be pretty good evidence to get out. In fact, the last low that we reached in September of 2024 was a roughly 147.50. So if we get down to there again, that would imply that the thesis is not so correct and it'd be time to get out.
What can you tell us about investing strategies by the so-called smart money and big institutional funds?
Think of a Warren Buffett, where he'll wait for something to get down to a price that he's already determined is attractive and wants to get in. Of course, he has to sell at times too, but the point is he waits for the right opportunity. So for me, looking at the market right now, we were just talking about this, that the markets, if you looked at it from the year 2000 to about the year 2014, things were basically in the same range for 14 years and then finally broke out. So the market doesn't always go up. And we might find ourselves, it's possible that we might find ourselves in another extended period of range-bound trading. So that means that the only way you're going to really make any money is that you'll have to start getting into stocks that are at good value points, holding them until they get to places where they may be considered too expensive, and then maybe sell them and move on. So I do think a lot of institutional money is buying. We have evidence to prove that they are. But at the same time, it doesn't mean that the downturn is over. They're going to be patiently waiting for prices to keep coming down, just like we just saw for Google. So as more stocks get pulled down into price ranges that are more attractive, you'll start to see more buyers come in. But at this point, all I can expect is more volatility. I definitely don't see a good case for a bull market for this year, but I also don't see a case for like a catastrophic event either. We just probably just going to be range bound for a while in a very wide range and then maybe break out sometime down the line. We'll see.
This is a tricky market. Thank you for helping us out today.
Thank you as well.